Good morning, everybody. It's Monday, July 8th, 5:27 a.m. Central Time. Grain markets are lower this morning. December corn futures down 4 3/4 at 4.19 1/4. November soybeans down 17 1/4 at 11.12 1/2. December Chicago wheat down 7.5 at 6.06. December Kansas City wheat down 10 at 6.06. December spring wheat down 7.5 at 6.43 1/2. Let's start off with this weekend weather.
So, weekend hailstorms damaged crops in Nebraska, South Dakota, Kansas, Iowa, and Minnesota. The vast majority of the damage occurred in south central Nebraska, where some corn and soybean fields are likely total losses. Hurricane Beryl made landfall on the Texas coast early this morning. Hurricane-related rains are expected to move northeast through parts of Oklahoma, Arkansas, Missouri, Illinois, Indiana, Michigan, and Ohio during the next few days. Temperatures across the central U.S. will average from normal to below normal during the next 5 days. Above normal temperatures are likely, however, during the 6 to 10 and 8 to 14 day periods. Normal to above normal rainfall is also expected during that time frame.
Let's take a look at the weekend hail event. This is a good map from our friends at Crop Profit. So yeah, this area in south central Nebraska was most heavily impacted, but it was in other places as well. And it's pretty devastating for the farmers who had crops that were totally wiped out, half wiped out, pivots destroyed, all sorts of really messy stuff comes along with this. This feels eerily similar to the flooding event that we had a couple weeks ago, in that you had this nasty weekend weather event, yet the market just does not care. You see no reaction. All the grains are trading lower this morning. And these are some, you look at this map and the way to read this, the darker green, that's like more heavily weighted in terms of production density. So these are some pretty, big time areas in Nebraska. I guess the market's perception, right or wrong, is that the damage and losses are just not widespread enough to really move the needle, but hugely unfortunate for those who were impacted. The weather, I guess aside from that, the market looks at this and sees a benign to bearish setup. Some of these areas that are going to catch the rains that are associated with the hurricane are dry and have been getting a little bit drier. We're going to look at the drought monitor in a second, but parts of Illinois, Indiana, Ohio, they could use the rain, and it looks like they're going to get it here with this tropical storm moving up through the Corn Belt. So yeah, hail damage is nasty, but the market just does not see a threat or a problem here.
So, USDA's weekly drought monitor data released last week showed that rainfall was scattered throughout the Corn Belt, causing drought conditions to improve in northwest Ohio, northern Indiana, western Missouri, and central Iowa. A lack of rainfall caused conditions to worsen in southern Ohio and across portions of Illinois. Parts of the High Plains also received precipitation last week, leading to improved conditions in southwest Kansas and portions of Oklahoma. Conditions deteriorated in southwest Nebraska and north central South Dakota. When we look at the percentage of U.S. areas experiencing drought, corn country 7%, soybeans 9%, winter wheat 19%, spring wheat 6%, and cattle country 14%.
So that map I showed you guys, if you were watching, of the hurricane related rains, that those forecasts could be correct or they could not be correct. And these areas of say like south central Illinois and then southern Indiana, southern half of Ohio, those are like your driest areas of the Corn Belt. And depending on how it tracks, they could be hit. They may be missed. Looks like Kansas and Oklahoma, maybe some drought building there, which is unfortunately kind of par for the course in those areas. So, I mean, as far as corn and soybean production goes, we don't have a major threat despite some of this building dryness.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some recent videos?
Brian was on Wednesday. We took 1 day off last week. I think we've taken 2 days off in the last 2 years. But in any case, Brian has been working with this 2014 analog as it relates to corn and soybeans. And it's been very, very good, to say the least. It's good, but it's bad for you guys. I think this is must-watch stuff. The work that Brian's done here is really, really fantastic. And some of the projections, I'm not going to call them projections, but some of the ifs are scary and sobering, but you guys need to know what's going on here. Go to standardgrain.com, sign up this morning. I'll send you a copy of this morning's email, which includes that video along with a whole bunch of other stuff. This is a $50 per month subscription. You can cancel it at any time. No other fee, no other obligation. Nobody will try to sell you anything else. Give that deal a shot this morning, guys.
The USDA's China office has lowered its forecast for the country's corn imports. The office is forecasting imports at 20 million metric tons, down from the June estimate of 23 million metric tons. The reduction is attributed to an abundant domestic corn crop, which is forecast to reach 295 million metric tons. The USDA is forecasting the crop at 292 million metric tons. Corn imports are also expected to decline due to an increase in imported substitutes, such as barley. The office kept its estimate of China's new crop soybean imports unchanged at 103 million metric tons versus USDA's official estimate of 109 million metric tons.
So you've got your USDA Beijing office here with some import projections for China that are below the World Board or the WASDE numbers. And I think if I had to go with one right now, I'd say the Beijing office is probably closer to reality, given what we know about export sales out of the U.S. in particular. That's a big difference in soybeans, especially 109 is the World Board number and 103 for soybeans is the Beijing office number. And for corn, I guess they're not seeing the evidence of the need for imports either. 20 million is still a big number for China, but I wouldn't be shocked if it came down further. We have no idea what's going on in China. I mean, USDA puts stocks numbers out there, but a lot of the information is really bad. It's just they haven't bought much from the U.S. and I think there is some evidence perhaps that maybe purchases out of Brazil could be not as great as some people would like to believe. I don't know.
U.S. ethanol production increased last week. Weekly output of 1.06 million barrels was up 2% on the week and up 1.1% versus the same week last year. Ethanol stocks were pegged at 23.6 million barrels. The print was up marginally compared to the previous week and up 2.7% compared to the same week last year. Implied gasoline demand was up 5.1% compared to the previous week and up 1.3% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is down marginally versus the same period last year.
This is a good number for ethanol production. We should hit USDA's target for the marketing year. Ethanol stocks are record high seasonally, but they're still kind of trending along with normal seasonal patterns. So I'm not overly excited about that. I think USDA is projecting that corn demand via ethanol is going to be unchanged during the new crop marketing year. So this is a really solid segment of your demand base. It's just not going to be a needle mover in terms of the balance sheets. It's not going to change the dynamics of the markets very much.
U.S. corn export sales were poor last week. Net corn sales fell below pre-report estimates at 14 million bushels. The print was down 34% from the previous week and down 57% from the prior 4-week average. Unknown destinations were the largest buyers for the week. Net soybean sales were at the lower end of expectations at 8 million bushels. The print was down 19% from the previous week and down 32% from the prior 4-week average. China was the largest buyer for the week. During the 4th week of the 24-25 marketing year, net wheat sales surpassed pre-report expectations at 30 million bushels. Mexico was the largest wheat buyer for the week.
We'll start with the good. The wheat number was excellent. That's the best wheat number we've seen in a while. And it wasn't just Mexico. There were a number of buyers that lined up for U.S. wheat. And that's despite the fact that we're still not really competitive compared to Russia, who's kind of been the global price setter. So corn and soybeans, I mean, old crop sales, we've only got a couple months left in the marketing year. I think we're going to hit USDA's targets. Here's the China numbers. China still hasn't booked a single cargo of U.S. corn. They still haven't booked a single cargo of new crop U.S. corn. Still haven't booked a single cargo of new crop U.S. soybeans. And the numbers, where should we be in soybeans? Last year we were 1.7 million. 2 years ago, China had booked 7.8 million metric tons of new crop U.S. soybeans by this time. So they should be kind of normal year between maybe 2 and 4 million. In corn, China buying U.S. corn is still a newish thing. They never really did it in any material amount before 2020. Then late in 2020, they bought a bunch and did for a couple of years. So I don't know. We have a new crop export problem and a problem with sales, especially as it relates to soybeans, even to all destinations, including China. Your new crop book of soybean export sales is the worst since 2005. I know when we get comments on like YouTube and stuff, it's almost always about production issues. USDA is overstating production. In this instance, USDA, given what I know today, is almost certainly overstating new crop export demand for soybeans, which would be a friendly item. That's a friendly-ish item where USDA is actually giving you something to work with here that could help to, I'm not going to say support the markets, but it's a friendly item on the balance sheets that they're overstating exports. Just the market doesn't believe it. And the market is faster than government. Business is faster than government. That's just how this stuff works. The one thing that USDA can really shock us with is acreage. But when it comes to sales, we can look at the pace. We know if they're right or wrong to a significant extent.
USDA reported a flash sale of soybeans on Wednesday. U.S. exporters sold 4 million bushels of soybeans to unknown destinations. Of the total, 2 million bushels are for delivery during the current marketing year, and the other 2 million bushels are for delivery during the next marketing year.
That's good, but it's not an amount that's big enough to move the needle. Is that China getting started with new crop? I don't know. It could be. We won't know for a while. What did cattle do last week?
On Friday, they were mostly lower. Feeders were down $1.90 to $1.22 lower. Live cattle were 40 cents lower to 50 cents higher. Cash cattle trade was extremely slow last week due to the shortened holiday week. Established trade was only reported down in the southern plains at 190, which was steady with the prior week. Box beef continued to climb higher. On Friday, choice ended the day at 330.43. That was up 59 cents. And select ended the day at 305.06. That was up 68 cents.
Outside markets to start the week, U.S. dollars about flat. Stocks are about flat. The S&P did post a fresh all-time high on Friday, I believe. Bonds are off a little bit. Gold's down $16. Crude oil is down 82 cents in the August WTI at 82.35. Have a great week, guys. Talk to you on Tuesday.